Welcome, everyone. My name is Pam Dunwald, and I am one of your nurse advocates from Your Nurse Advocate Consulting. And today I have the pleasure of introducing Brent Wilkerson. He's the producing manager of CrossCountry Mortgage in La Crosse, Wisconsin. And so, Brent, welcome. Glad to have you here.
Thank you so much for having me, Pam. I'm super glad to be a part of this discussion, and thank you for putting me in front of your people.
Sure. Well, we're here today to discuss whether or not reverse mortgages, have a place in helping our aging loved ones either age in place or help finance their golden years. So there's a couple surveys that I found, and I was amazed at the results. It said one said that 90% of seniors wish to age in place and remain in their home for the rest of their lives. And another survey said it was 88%. So either way you slice it, that's a really high number. So we're going to talk about the role reverse mortgages may play in keeping our aging loved ones at home longer. So we've assembled some of the top questions that is asked regarding reverse mortgages. And so in general, the top questions are along the lines of, what is a reverse mortgage? Is it a scheme? What is a reverse mortgage bad? Is it worth it? Who is a reverse mortgage good for? When is a reverse mortgage a good idea? And can a reverse mortgage be good for our seniors? So these are some of the general questions that hopefully when we start answering some of the specific questions that you'll be able to arrive at your conclusions. And, our goal is to share some basic information and give you food for thought on the topic of reverse mortgages. So if you're considering this as a possibility for you or an aging loved one, please reach out to a mortgage lender such as Brent or another professional that you trust to discuss your individual situation. So let's get started with that basic question, Brent. What is a reverse mortgage?
Oh, yeah. It's like the name suggests, it's going backwards instead of your traditional forward mortgage. Most anyone that wants to age in place has owned their home for quite some time, and they paid what's more a traditional forward mortgage because you're paying the debt down. A reverse mortgage does require some qualifying factors that we'll go into in greater detail as far as age and things like that. But the equity in your home is used to pay you, therefore the balance is going backwards. So it is a deferred interest mortgage, or also known as negatively amortizing. So the balance can grow over time, but there are some stop gaps put in place that some measures to you can only borrow up to a certain amount of the value of the home when the loan is structured. So it's the opposite of a forward mortgage paying the debt down. It actually allows you to take everything that you've paid off and get that money back over a scheduled period of time. And there's different variables on how you can access that money. So it's a deferred interest loan versus a forward mortgage.
Okay. So who would qualify for a reverse mortgage?
Oh, gosh, really say anyone above the age of 62. But that's kind of the minimum standard. You have to be at least 62 years of age or older. We do come across some instances where there is a spouse that's maybe 66 and there's a younger spouse that's the age of 60. They can still be a part of the process and transaction, live in the home. They're not on the mortgage if they're not of the age of 62. But the most simplest of terms is 62 years of age or older is who will likely qualify.
Okay. And then who pays back that reverse mortgage?
The homeowner can choose to make forward payments at any given time. They can live in the home as long as they're alive. If they meet the standards of 62 years of age or greater, they may live in this home for 20, 30, 40 years. And so it gets repaid upon moving out of the home, upon death, at that time. And so anything that is owed on the balance gets repaid through that sale, and anything above and beyond what is owed goes to the family or the estate of that homeowner.
So then what you're saying then, Brent, is that the heirs, if they can sell the home, the heirs most likely would not suffer a financial impact on that mortgage.
Correct. And that's a really important topic, Pam. It's known as a non-recourse loan. So let's just take a worst case scenario. Let's say someone takes out a reverse mortgage, lives in the home for 20 years. They owe $500,000, and let's just say the home was only worth 400,000 upon that sale. It's non-recourse. So the surviving heirs of that estate or family are not held liable for that amount owed. The loan's insured through the government, through the FHA. So there's an insurance policy on the loan that covers that loss if that were to occur. So anything above and beyond what is owed goes to the family and the estate. If they owe more than what the value of the home is upon that sale, it's covered by the mortgage insurance premium pool through the FHA. So the family is not held liable. It's a non-recourse loan. So that's part of the way the loans are designed.
That's awesome. So who do you have to go to a special kind of lender, or where do you get a reverse mortgage from?
Yeah. So you mentioned it early on in your intro. Trust is the huge piece of that, right? I think if you're getting advice from a paid celebrity spokesperson on TV, I can tell you the companies that pay for that type of advertisement are the most expensive in the entire country. Okay. Not to say they're bad or anything. They just have a very expensive marketing budget to pay that type of personality to promote their business. So I would, of course, we're a great resource as CrossCountry Mortgage. I'm licensed to do business in 6 states currently, but we have a nationwide network of licensed professionals that specialize in reverse mortgages. So really checking with me for starters, but also oftentimes what we've learned is financial advisors are very pivotal in this conversation with estate planning. So financial advisors are learning more about it, and it's becoming more of their knowledge base in planning, but really working with a reputable, I prefer local. Obviously, I'm in 6 states, so I'm not local to everyone, but having a trusted relationship that can really explain some of the nuances and benefits of the reverse plan is I think, really important.
So another question that comes up in just how this process works is a question came up is, can you still obtain a reverse mortgage if you have maybe not so good credit?
You can. There's a little bit of a financial requirement. We still have to make sure that the homeowner has some basic means to obviously pay for some cost of living, whether it's insurance on the home, property taxes, and some upkeep. But the credit score requirements are basically non-existent. Now, being that it's an FHA insured loan, you're likely still going to have a credit pull because there are some things on credit, whether it be judgments, collections, that could be a negative effect as far as the liens on the property itself. So we'll have a title company involved also to check that. FHA loans allow us to go down to a 500 credit score. So it's kind of a loaded question. I'm a bit reluctant to say there is no minimum. There's still going to be some requirements to qualify. Some really bad credit events can lead to other financial problems that need to be taken into consideration.
So Brent, with that being said, would it be the mortgage lender working with them on this reverse mortgage that would determine that?
Yes.
Okay.
Yep. So someone like myself, we're going to be the point person that my clients would be dealing with. I've got a team of people behind me to help support the process, of course. But I like to be the face, if you will, or in the relationship to help guide them through the process.
Okay. So next question is can a reverse mortgage be obtained with an already existing mortgage?
So depends. So what we would do, handle it like a refinance. So if they've got a traditional forward mortgage in place, and let's say they owe $100,000, but the house is worth $500,000, if they meet the qualifying parameters for the reverse, we would pay off the existing balance on the forward mortgage of 100 and put the reverse in place. So there are some value and equity requirements that have to be met. But yes, the forward mortgage would be satisfied, and we'd put the reverse mortgage in place of what was owed.
Okay, got it. Makes sense.
Mm-hmm.
So another question along those same lines is, can a reverse mortgage be obtained if you don't have any income?
Typically, no. Like I said, there's a financial means test that needs to be met. And that's one of the improvements over the years. Back in 2015, the government stepped in, FHA, the Federal Housing Administration, to put some safety measures in place. Early days of reverse mortgages were somewhat abusive and kind of a loan of last resort for people in a financial distress situation. So that's where there's still some kind of bad hangover effects of grandma and grandpa losing their house to a reverse mortgage. And I can tell you with 100% confidence that this day and age, the government does not want to kick elderly people out of their homes. But there are still some pretty minor financial requirements that need to be met. And it's really just to make sure that the home can continue to be maintained, insured, property taxes paid, things like that.
So if our aging adult is receiving, their social security payments, I mean, that would be considered towards their income, correct?
Absolutely. Absolutely. Yeah.
Okay. So the next set of questions, just a couple questions, is when someone passes away, how does that reverse mortgage work after death? And I know you touched on that a little bit with the sale of the home, but if we can just um, circle back on that question again.
Sure. So, estate planning is important. It's one of those topics that many people don't want to discuss. We're all going to face it someday, but upon death, the executor of that estate or whoever is responsible to deal with the assets after their loved one has passed handles it like a normal sale of real estate. Work with a professional real estate advisor, someone that's going to help navigate that sale. Any financial advisors or attorneys involved. The money that's owed gets satisfied with the sale, and the money that's left over goes to the estate. If there is a surviving spouse, they can continue to live in the home until their final days. So an example would be, say the primary spouse is 75 and the other spouse is 73, and the 75-year-old passes away, and the remaining spouse lives there for another 20 years. They can do that. They can live out their years even though one of the spouses has passed. So they can remain in the home indefinitely. Now, if they move out into, family assistance or long-term care facility and sell the home, once they move out of the home, that balance does have to be satisfied. They can't keep it and rent it with that loan. It has to be paid once the homeowners move out of the home or pass away.
Okay, so if I'm understanding that, so if they move into, say, assisted living or move into a nursing home, those whoever the executor is, or those left, those families that are still as heirs of that home, they basically then really have to sell it, because that mortgage does come due then when there is no one else living in the home. Is that correct?
There's 12 months. They do have 12
Okay.
months to satisfy
Okay.
it. So it's not immediately, but it has to be a primary residence.
Okay. Perfect.
Mm-hmm.
So these next set of questions are kind of a general questions, but maybe before we get into that, maybe it's time to tackle the one question, a general question we had early on, and why is there some concern out there that reverse mortgages are just like a bad deal?
Well, I think it goes back to kind of the earlier days. Like I said, prior to 2015, there weren't as many measures in place. And so the loan in the early 2000s, I think, was, in my experience, abused a little bit. It was people going into foreclosure that were elderly and about to lose the home, and they qualified for reverse, but eventually fell behind on the maintenance and upkeep of the property. I think there's a stigma to that loan program that they're going to lose the home, that they're going to get this product, it's going to eat up all of their equity, they're going to owe more than it's worth, and they're going to be left high and dry. But I can tell you, with the FHA mortgage insurance premium that goes into a pool of insurance, and in the event the value of real estate goes down after this mortgage is taken out, it's a non-recourse loan. It didn't always used to be that. Okay, so being that it's non-recourse, no one else is liable to pay for that debt if it's more owed than what it's worth. So that's a big improvement there. I think there's heirs of real estate. Now, let's be honest, over 90% of the nation's wealth is in home equity. So when you have children and grandchildren thinking about, grandma and grandpa passing away someday and leaving some assets, right? A lot of it's tied up in equity. So there's concern that their inheritance is going to be dissolved. And that's why I've worked to kind of partner with good financial advisors, because I think there's a bigger picture to it. And if used properly, you can actually liquidate some of the equity while not having a payment. That's one thing we haven't mentioned yet. There is no monthly payment required on the reverse product. And that's where the balance can get bigger because there's interest accumulated month after month. But they could actually take money out of the equity of the home and then put that into an investment vehicle with an advisor, something a little bit more predictable, whether it's a CD, money market, something that's more liquid. So I think it comes down to lack of understanding, right? The lack of education, concern that an inheritance is going to get dissolved, and that our loved ones are going to lose their house. Those tend to be the biggest kind of stigmas that are, I think, misunderstood.
So then, Brett, if I'm understanding that last part, so that there is a way in working with, tax or financial planner, other professionals, that you can possibly preserve some of that wealth that, that can be handed down to the heirs.
Yeah, absolutely. And that's kind of the beauty of the product is many elderly people aging in place are on a fixed income and they don't have maybe the resources outside of their Social Security or pension that's coming in. And they'd like to travel. They'd like to spend more time with family. There might be distance that separates them, but you can actually set it up with a line of credit and take monthly distributions and pay you, right? So you could increase your household income with this equity in your home that you worked hard to pay off over the years, but you've also seen the value of your real estate go up over the last 10, 20, 30 years. The only way to access that in the traditional sense is to sell the house, right? And then what? You got to find somewhere else to live. Or you take out a forward mortgage, right? And you got to pay interest on that every month. So if you take the money out, invest it, you still have to service the debt. Whereas the reverse allows you to access that equity, put it into your hands to decide how you want to spend that. And there's no monthly payment. So the house could be worth $1 million. Let's say they take out a $300,000 reverse mortgage. It can be in a lump sum, or it can be a line of credit where they only use a bit at a time over however long they're there. And so you really have a lot of control and say on how you want to use that. And so from an investment strategy or investment planning, having that money liquid allows the homeowner to have more options with what they want to do with that money that's kind of locked up. Like equity's nice to have, but it's idle money. You can't access it if you don't pay interest to borrow against it with a traditional mortgage, or you sell it. So this reverse option, and it's actually also referred to as a HECM, that's a home equity conversion mortgage. So you're converting your equity into a reverse mortgage with a line of credit.
Okay, awesome, thank you. On to some more general questions. Are reverse mortgage payments tax-free?
Well, there's no payment. So the income that you pull out of it or the equity is tax-free because you've already been taxed on. If you paid interest over a longer period of time, you've been taxed on that money. So it's tax-free money. So any dollar amount that you pull out is tax-free. You don't have to claim it as income. It's your equity that you've already earned and paid to get.
Okay, and so this is probably a very similar question, just rephrased a little bit, but just to confirm what you just said. So are reverse mortgage proceeds taxable?
No. Now, I'm not an accountant, right? Let's be clear here. I'm a mortgage professional, mortgage advisor. I do think it's super important to also consult with those professionals, whether it be a tax strategist, a CPA. But no, the income that you pull out of the equity is tax-free.
These last set of questions are a little bit more specific. So we'll go ahead and see if we can and get these. I'm going to share these with you, Brent. So
Mhm.
can a reverse mortgage be refinanced?
Yes. Um, and that's really how you kind of get into it. You refinance, even if the home's free and clear, we kind of approach it as if you're refinancing the house. You can pay it off at any time. There's no prepayment penalties with these loans. If you take one out and say you've kind of run its course and you want to just take the assets to pay it back down, you don't like what it's doing for you, you can always pay it off. Um, you can refinance if there's benefit. Now, there's some requirements, right? We can't just keep refinancing if there's no benefit.
Mhm.
But yes, they can be refinanced.
Okay. And on a reverse mortgage, can the interest be deducted?
Well, you're not paying anything, so there's
Right.
no interest itemization.
Okay. So can a reverse mortgage be used to purchase a home?
Yes. So that's what we're seeing actually more of. And here's a couple of scenarios. Um, Say, for instance, grandma, grandpa have $1 million home. It's too big. They want to downsize and they want to buy a condo closer to family, call it 400,000. They could sell the house for $1 million and they could go pay for the condo free and clear, or they could take out a reverse of say 200,000, that way keeping 800,000 liquid and invest that how they see fit, and take out a $200,000 reverse on a $400,000 purchase and not have a payment on that $200,000 indefinite. Or we've seen people, it's their primary residence. Let's just use this $1 million number again. It's $1 million home, primary residence here in Wisconsin, let's say. And they've got family and grandkids living in Arizona, and they'd like to buy a little condo there. They owe the home free and clear here for $1 million. Let's say they take out a reverse product, this reverse program for $400,000. They then become a cash buyer to go buy a home in Arizona that would be owned free and clear. The reverse product is on their primary residence here in Wisconsin. So
So
that's
then,
another way.
so then, and so then they would still have, so then the upside would be they would still have the equity in that original primary residence to, offset, any costs that they would have, say when they pass, they still have that to liquidate.
Mhm.
But the only downside, they would still obviously they would have, property taxes on both. I mean, there would still be some upkeep expenses on both, correct?
Correct. Yes, you still have, yes. So the property, the second home, the non-primary in the Arizona scenario would be free and clear, but there's still costs associated, whether it's tax, insurance, any sort of monthly association fees. Plus the primary in Wisconsin still has its upkeep, tax, insurance, utilities, you name it.
Okay,
Yep,
perfect. So the next question is, can I sell my house while it is in a reverse mortgage?
absolutely.
Okay, and I think we talked a little bit about that.
Mhm.
Can you, and then right after that was, can you buy back your house in a reverse mortgage?
So like just pay off the reverse mortgage.
I guess that's what yeah, it was
Yeah,
the question that was associated with, selling your house.
I see. So that's maybe a misconception. I think people still think that when you take out a reverse mortgage, you're giving up ownership in the home, and that is not true. You
Okay,
remain on title. You are the primary owner of that property. So you're not selling it to anyone. If you're working with someone that says you're selling it to them, you need to probably question that relationship and learn more. But you retain ownership all the way through. You do not give up ownership to the property until you actually sell it. Now, if you take out a reverse and again, you don't like it, you've got the means to pay it off, you can always pay off and still own your home free and clear at that time if that's what you decide to do. But you do not give up ownership in your property.
okay. And so I think we answered this question already in your condo example, but can you use a reverse mortgage to buy a second home?
Yes, but that's assuming you qualify for the reverse on your primary, right?
Mhm.
So the primary is the key. It's got to be a primary residence in which we put this program in place on. And if you've got enough equity in that home, we've actually seen, a wealthier set of clients that do that. they take out a reverse on a multi-million-dollar home as much as they can get and go buy another property in another state. But their primary residence is the key. It has to be your primary residence.
Gotcha. These last two questions kind of have to do with Medicaid and Social Security, but one was, will a reverse mortgage interfere with Medicaid payments?
So it's a good question. It's a great question. With Medicare, there are no issues with having a reverse mortgage. Medicaid, here's where it gets got to be a little careful. And I've got some notes on this, so forgive me. I'm just kind of reading it here. But Medicaid, you have to be a little careful because any draws or income from that reverse product, from the reverse mortgage during the month, anything that's left in the borrower's account can be troubling. So really, if they take money out, say they take $2,000 out a month, they just can't leave that money in their account for Medicaid purposes. They would have to spend it. So they're not accumulating a reserve that could affect their Medicaid. That makes sense?
Because yes, because but depending on the state, they have, minimum requirements as far as how much assets you can have at one time to qualify for Medicaid. So yes, that does make perfect sense.
Right. And that can be used for any expense. That can be for in-home care, utilities, medicine, doctor visits, you name it. They just can't keep, they have to spend it that month. So you have to have a pretty good plan in place for that, but that's how that works.
Okay, and then, and I know you mentioned Medicare, but the last question is will a reverse mortgage affect my Social Security?
No, because it's tax-free money. And so your Social Security benefits, you're not, no.
Right, and those are determined, and I'm not quite sure if maybe someone meant whether that would affect, like your income taxes, because I know, if you're taking that, would that then be treated as income?
No.
Okay, so then it really wouldn't.
Correct.
Okay, so those are the questions we have. Brent, can you think of anything that we didn't touch on that you feel would be important to share on reverse mortgages as we wrap up?
Again, I think, as my practice continues to evolve, I've been in the mortgage space for 19 years. I sold real estate before I got into lending. So I've seen this program evolve kind of through the early days into where we are now. Again, surrounding ourselves with professional advisors, much like yourself, right? Like I believe there's an important amount of trust and relationship in what I do. The mortgage industry for decades has done a really good job of just selling people debt and moving on. That's not how my practice is designed. That's not what we work to do. As a certified mortgage advisor, we try to help our clients grow their net worth by managing their debt properly and their real estate. So I think, again, it's not every mortgage professional is created equally. I think it's important to ask good questions. And anyone taking out this program, they actually have to take an educational course by a third party that we do not have control over. So that's another stipulation the government put in place. There's a financial literacy test and some educational requirements that people do have to take that we do not, we arrange it, but we don't control that. It's done by a third party organization. So I think there's a tremendous amount of opportunity in helping people age in place and kind of live the life they want. There's a lot of pride in owning your home free and clear, of course. However, I've seen it hinder a lot of people's ability to do the travel, the time with family, other investment opportunities that might set their family up generationally. So there's a big picture with this program. So I just encourage everyone to reach out and, find someone like myself and work with a real professional.
And as you were just mentioning that, as far as traveling or seeing, family, I mean, even to age in place, that reverse mortgage can allow them to dip into that equity, and maybe they just need a little help. Maybe they need to hire a little bit of caregivers, to be able to stay in their home. So that's, a great way to use some supportive services, as well, to be able to allow you to age in place. But Brenda,
Yeah, and one more thing to add to that, Pam, real quick, like yourself, right? Like you have loved ones that you're caring for that might live alone or maybe a little bit rural setting, and their children and their loved ones live a few hours away, and they want mom and dad to stay in the home, but they might need some modifications to the house to make it a little safer. They want to work with someone like yourself that's going to be there for them on a daily or weekly check-in. So it allows the family to provide a better age in place opportunity with you and your team in creating that plan so they don't have to sell or they don't have to move into a home. So yeah, I think that's all really important stuff.
Well, Brent, I want to thank you so much for taking the time out of your day today to clarify some information on the value of reverse mortgages. If someone were to want to reach out to you and contact you, what would be the best way to do that?
Yeah, that's great. So my website is pretty easy to find. Google, you can go to the wilkersonteam.com. My office number is 608-784-5626. The best way to remember that is 608-784-LOAN. That's LOAN. So if you still have letters on your numbers, it spells out loan. My email is Brent.Wilkerson at ccm.com. And that's all on our website. So if you just find the wilkersonteam.com, you'll see a bunch of Google reviews on Google. It's a great way to find us. I'm on LinkedIn, Facebook, Instagram. I don't do TikTok. I don't do Twitter, but we're pretty easy to find. And like I said, I'm in La Crosse, Wisconsin, but I have a nationwide reach when it comes to helping people.
And we will, just for those that are viewing the video, we will have in the video description, we will have all of Brent's contact information. So you'll have easy access to there too. So Brent, thank you so much again. I just really appreciate you taking the time to share this information with us.
Oh, thank you, Pam, for having me. I appreciate this opportunity and hopefully it's helpful to the families you know and work with.
Absolutely. All right. Well, this is going to wrap up another episode for Your Nurse Advocate Consulting. So we'll see you back here soon. Take care.